The value of manufactured goods traded in the second quarter of the year tumbled by 36% from 4.51 trillion naira in the second quarter of 2021 to 2.87 trillion naira in the corresponding period of 2022. Well, according to the foreign trade report by the National Bureau of Statistics, exports of manufactured goods took a downward plunge within the period in review from 211.67 billion recorded in 2021 to 119.53 billion in 2022, representing a 43.5% decline in 12 months. The fall in the value of traded manufactured goods came as manufacturers continued to grapple with skyrocketing costs and a harsh operating environment. According to findings by correspondents, export of manufactured goods also took a downward plunge within the period under review from 211.67 billion naira recorded in 2021 to 119.53 billion naira in 2022, representing a 43.5% decline in 12 months. Well, let's get to our first topic of discussion today. In its continued efforts aimed at stabilizing the value of the Nigerian currency, the Central Bank of Nigeria injected a total of $7.6 billion into the economy in the first 5 months of the year. According to the monthly economic report on foreign exchange markets development, recently released by the Apex Bank, the monetary interventions in the markets recorded $1.65 billion, $1.39 billion, and $1.82 billion in January, February, and March, while $1.56 billion and $1.18 billion were recorded in the month of April and May, respectively. A further breakdown of the report shows that foreign exchange sales at investors and exporters and interbank invisible windows decreased by 37.9% and 0.7% to $0.16 billion apiece, below the respective levels in the preceding month. Well, let's make more sense of this and understand what this means, of course, an impact on the overall economy. I'm being joined live this Monday afternoon by the Director of Research and Strategy at Chapel Hill, Denham, Mr. Tajuddin Ibrahim. He joins virtually to discuss this. Thank you so much. It's good to see you.
Same here. Thank you very much for having me on the show today.
Yes, I'm looking at this figure from the CBN, $7.6 billion. A little bit of breakdown shows that January we had about $1.65 billion, February 1.39, March 1.82. How sustainable is this? For a country that has total external reserves below $40 billion, where do we stand as we continue to defend the Naira day after day?
Thank you very much. I think we have all seen a downward trend in the movement in supply of FX by the CBN to the market. And that downward trend that we have seen within the past couple of months, it's an indication of our falling FX reserves. If you take a look at the reserves, just like you rightly said, they are below $40 billion. And it is an indication that the CBN will have to be more cautious in terms of supplying FX to the market. The reality is that it is not sustainable in the medium to long term. What we need to do as a country is to find a way to ensure that we generate more FX inflows from our production activities as an economy. And in doing that, there are some sectors that the government has to focus on and ensure that those sectors are monitored in terms of output to ensure that we have higher FX inflows into the country so that we can take care of the enormous requests that we have in the FX market. So in summary, the downward, the falling reserves is not sustainable, and also, the fact that supply by the CBN is falling is indicating that some businesses are currently suffering in terms of their FX needs or requirements for their businesses.
But I'm going to ask as a follow-up that despite all of this support and defense, yes, this is the word defense by the central bank, we still see that as at last week, the I&E window closed at about 427 naira, around about that, and the parallel market was hovering around 690 naira to 700 naira to a dollar. This disparity still persists.
Yes, this disparity persists, and it is one thing that we believe that Nigerians should be educated around what the fair value of the Nigerian Naira is relative to the US dollars. And at Chapel Hill, Denham, for instance, we estimate that the fair value of our currency on a real effective exchange rate basis is around 565 naira, which means that the currency is overvalued at the I&E window, where it is trading at around 427 naira, and it is undervalued in the market on the streets because it is trading at around 695, 700 levels. So if we compare our economy with global economies and we apply the real effective exchange rate approach, our belief at Chapel Hill Denham is that the currency should be priced at around 565 naira to a dollar. So there is need for the public to realize that and then stop speculative demand. And I say speculative demand because it is those speculative demand factors that are largely speaking driving the Naira exchange rate higher in the parallel market. You will see that there is a lot more discipline in the I&E window, which is a more structured and an official market compared to what you have on the street. So there is need for the public to also realize that 700 naira in the parallel market is way too high. When you look at the fundamentals of Nigeria as an economy, we should be talking around 565 according to our research.
That looks good. The central bank, as part of efforts to address this ugly trend, because Mr. Ibrahim, you agree with me that we've been talking about this for some time. I mean, the FX thing, and it continues to be a recurrent decimal because of what we face as a country. And as one of the measures being taken by the CBN, the stopped sales of FX to BDC operators. And they are saying that by the end of 2022, they might stop to sell or to make Forex available to financial institutions, that deposit money banks. If this happens and we continue like this, we're not producing enough, what do you think would happen to Africa's most populous nation with regards to our currency?
With regard to the planned decisions by the CBN, the first that you said is around the borrow the change operators by stopping selling to them. I think that decision came much later than expected. Because if you look around the world, you hardly would find a market where the central bank there is the one supplying to some operators in the market. If you need US dollars, you will go to the market and buy at an appropriate price, and you will go to the appropriate market. That is why the CBN believes that they should be excluded from the market. And I think it is just natural for us to see knee-jerk reactions, and those knee-jerk reactions could extend just like it has done, that we have seen the negative impact on the FX rate in the market since they were denied access, to the market. I think the second thing that you talk about is around, the stoppage of, sales to the banks. It is also going to be negative in the short term, but if we take a long-term view at it, you will agree with me that, financial institutions should not be looking to rely on the central bank excessively to supply, their FX need. If they need FX, they should go to the market to buy at prevailing prices. And if we leave that currency to the forces of demand and supply, all of us in this country will see stability. We are not seeing stability because the currency is still being excessively managed. The moment the CBN, reduces the way they manage it in terms of supply and in terms of intervention, we are going to see a change. It will hurt in the short term, but in the long term, it will be beneficial and take Nigeria to a global standard in terms of, the trading and supply and demand of FX in the country.
Are you telling me that some folks would not take advantage of opening up the market? Because you're talking about demand and supply, allowing it to control the market price. If that happens, do you think that some people would not take advantage of the market and exploit Nigerians? Some Nigerians would do whatever to get FX, to travel, or to run their businesses for small businesses. What do you think? Go ahead.
So good. So for FX, need for traveling, for for health reasons and businesses, small businesses, the CBN has been clear, that they will always supply FX, to those users, and that is the reason we have the SMIS window, which is the small and the secondary market intervention sales that the CBN does to the bank to ensure that the small business owners have access to FX to bring in their goods and services, and also if you want to travel, you can go to that window to get FX. That, in my view, will still be in place. And if you look at 2016, they introduced the I&E window when the pressure of investors became too much at the door of the CBN. And look at it, after the introduction, the market, when they were introducing it, the market went high. But after they introduced it and the investors began to sell in that market, and those that need began to also buy, demand and supply balanced, and the FX stabilized at that point at around 360. So we need something similar in terms of reform. We need something similar in terms of restructuring of the FX market to bring the exchange rates down to a fair level, which we consider is around 565 Naira or thereabouts. If you bring in discipline, better structure, you reform the market, you will see the rate stabilize, because speculative demand will no longer make sense for those that are speculating in the markets.
You mentioned in your first submission that what we need to do is to ease up or more open up ways for FX inflows, like sectors to focus on that can help us drive FX into the country. I'd like us to go back to that. What basic sectors do you think government can focus on? Because we must continue to produce and export if we are to get FX. And we shouldn't be an importing nation, which we have been. So what sectors do you think can help address this challenge? Maybe in the medium, short, medium, and long term.
Very good question. At Chapel Hidden Ham, for instance, our view is that, if the government focuses in the short term to medium term on the agriculture sector, we are going to see the benefit. If we have, higher output in terms of agri, we are going to, generate more FX for, the economy. But, the output in our view should not just stop at, raw materials. For instance, when you produce cocoa, cocoa will be a raw material for the production of chocolate. When you produce cocoa, cocoa will be a raw material for the production of, beverages. Let me not mention names, but when we produce, cocoa, for instance, and we have, an industrial sector that can turn the cocoa into chocolate, then we export the chocolate, we will generate more value for that production in terms of FX income for the country, because we have added value. Instead of just giving them agric products, we are giving them processed products. Sadly, what we are currently seeing in Nigeria is that we produce enormous cocoa, we export the cocoa to other countries that know how to produce good chocolate, then they produce the chocolate, and we import it from those countries at exorbitant prices. So the government should look in that direction. I believe if we do that, that should help our FX earnings as a country. That speaks to the agri sector. Let us take a look at the the other sectors, such as the power sector, for long-term solution. The power sector, for instance, the transportation sector, for example. If we take those two sectors and we ensure that they have the required infrastructure, it will lead to improvement in terms of development for the country, and we will be able to attract more foreign direct investment into this country. Investment that will come and stay with us over a long term, not foreign portfolio investment that comes and goes very quickly. So these are some of the areas I think the government can look at, and policymakers should also encourage the government to implement these strategies, in my view.
Interesting conversation. We're actually out of time, but I'd just like to chip in this before I'll let you go. The banks have a role to play in the distribution of FX at the moment. Do you think they're supporting the central bank in your assessment?
Yes, I believe they are supporting the central bank. If you take a look at what we call swap is one instrument that some of these banks are using to support the FX need of the economy. So they swap their currency, their dollar money, their dollars, with the CBN, collect Naira, and agree on terms and conditions. Upon maturity, they get their FX back from the CBN. While they let go of that FX, the CBN supplies that FX to the broader economy for usage. So the banks are supporting, and swap transactions is one of the ways that they are supporting the supply of FX to the markets.
It's a good way to start the week with Mr. Tajuddin Ibrahim. He is the Director of Research and Strategy at Chapel Hill, Denham. Thank you so much, and do have a great week.
It's my pleasure. Bye.